Want to get to Michael Strain first. Michael, what do you make of this?
I mean, I think what we're seeing is kind of wage growth having accelerated over the last few years. That's still at a point where it's pulling people into the labor market. So you saw an uptick in participation. There is some slack left. That slack is being absorbed. And the economy is adding jobs at a pace of around 170,000 if you look over the last 3 months. So ignore last month's noise, ignore this month's noise, average to about 170 or thereabouts. That represents a deceleration from where we were, over the last several years, but it's still solid. We're still in good shape.
We should say Rick Santelli is the winner.
Yes.
He came closest.
So we're going to go to Rick right now. Rick, you got the number you want, but I don't know if that's the number investors are going to want, given what the Fed may think of that.
Who cares? Seriously. If our central bank, Austin was talking about purgatory. I remember reading Dante's Inferno. The biggest contributor into that level of purgatory, it was pride. Inordinate amount of self-esteem. That is what central bankers have. If they think that they're the transformers that can turn economic straw into gold, that ends up in rising equity prices, light cycle, without the underpinnings of fundamentals, that really is purgatory. I think that 62.9 really gives me optimism on bringing people back into the labor force. Wages at 3.1, still hovering at the lowest level in recent cycle, especially for this year, but it's still holding a 3 handle. Listen, I think job growth is slowing a bit, but not nearly at the pace that many believe. And I do think that there are many uncertainties that will contribute to potentially giving us a tailwind on the job scene. And I still debate late cycle because I think there was 4 years that we're including in this 10-year cycle that just don't count.
The question about how the markets react, what we're seeing in the futures right now, is a slight move to the downside. And I do say slight. The S&P 500 lost probably about 4 on the futures. And the Dow is now down about 54, and that's just down 10. So, Darrell, what do you make of the numbers so far?
So, lighter on wages. It doesn't surprise me on the headline, as I just talked about. I thought the headline could be a 200-plus print. Strong month. Falling interest rates have put a tailwind in home builders. And better manufacturing data than we thought. I was a little surprised on revisions. I thought we'd get a positive revision. Net, we lost 11,000 in revisions. The unemployment rate ticking up doesn't surprise me at all. That's a rounding issue between 3.6 and 3.7, along with the labor force participation rate. I don't think this changes the path of the Fed, quite frankly.
Right. Okay, hold on. Let's talk to Mr. Purgatory himself. Austan Goolsbee. You might be in purgatory. I love you, man, but you might be in purgatory this morning with your number.
Yeah, look, Rick with the 200 IQ point play, not only getting the number right, and with the revisions, if you add those revisions, Rick might have been exactly on the number, and then quoting Dante. Not only does he know about purgatory, he knows what caused purgatory. I don't even know what to think. Look, this is a very solid number. I'm happy to see that. I hope this is an indicator that maybe the growth projections aren't going to be as slowed as what people are saying. I think this is a pretty strong number. I think if the market reacts in a negative way, it says, oh, that's so strong that the Fed will change its behavior. I think that'd be sad. I don't think it will change what the Fed does. I agree with what everybody else said.
And what the Fed's going to do is cut 25 basis points this month. Oh, they're cutting.
Hold on one second. Rick, what did you just say?
No rate cut in July. That's my prediction. I'll make it right now.
No rate cut in July.
Wow.
Yes,
because the number's so much higher, or?
No, I don't think we're that close to begin with, quite honestly.
So the markets will be completely offsides on that. Then,
you know what? At some point, the markets are going to have to go to adolescence and grow up a bit. These are not the old days. The markets used to be more correct because I think that our central bank had a better way to leverage its policy into our own economy. Lowering rates here isn't going to cure the ills of what other central banks' policies are doing to our economy. Listen, if bond yields go to minus 100, no amount of Fed policy is going to keep our rates from going down. End of story.
I think that's a good point, but I mean, if the Fed doesn't move on rates, Darrell, it would bring me back to early fall of last year.
Yeah.
Where the markets are sitting at record highs, the Fed direction and the markets work in opposite directions, and we're seeing signs of weakening. And that would scare me because we know what happened then. We know what happened.
Now we're building in eases. Both are wrong.
Yeah, I agree. I think with Rick, I think it does, if there's a risk here, it puts on the table that there isn't a July cut and that markets are incorrect here. There may be a cut in the second half of the year, depending on what happens with growth and GDP growth. You know, we have to remember jobs have slowed, right? So the average job gain in all of calendar year 2018 was 223,000 a month. At 160, 170,000 jobs, that's still a slowing, right? And it's right where we should be at this point in the cycle.
Look at the 10-year yield. We're approaching 2% now, 1.99%. We're also seeing a very strong reaction in the price of gold, which is down by more than 1% right now.
And the dollar. The dollar's zooming.
Yes, Rick, thank you. So we're seeing some very strong reactions, even though the equity futures look fairly stable in the back of this jobs report. Gold here down 1.6%. It had been going into the longest stretch of weekly gains since 2011. I believe it'll still hold that, but we are seeing a pullback here in gold.
I hear what Rick's saying. The problem is the Fed hasn't done anything to convince investors that they're going to change their behavior, and that's the issue. And so they've created this monster, and they shouldn't have, but they have. And I just don't see what criteria all of a sudden now they're going to come out and not move, because for them not to move in July would be unprecedented. I mean, that literally can be proven. They've never not moved when the market's
But do you think they should?
I think they should. I mean, they've got a lot of reasons to cut. It's not just the fact we could debate about the economy. It's the fact they've undershot on their inflation target over this cycle. It's some of them worried about the lagged effects from what's happening with trade. And look, I mean, they've got this crazy policy of QE working to lift asset prices. So asset prices are high because of the Fed. And also, rates aren't going to stay down if the Fed doesn't cut. So we talk about mortgage refi activity and housing, but that's because rates have rallied. So if the Fed wants to keep those rates low, they have to validate to some extent market expectations.
But Joe, is the question here, should they move or will they move? Right? Because those are two different things.
Sure, but I would argue they should have done a lot of what they did. But will they move? Yes, because that's what matters, right? What will they do?